Welcome to our sixth episode of Making Home Ownership Affordable, where we interview different builders, lenders, and organizations that contribute to making home ownership affordable. Today, we are interviewing the CEO of Covenant Community Capital, none other than Mr. Stephen Fairfield. Guys, this is an honor that he is sitting down with us. Pull out your calculators and let's hear what he has to say. Thank you for joining. Stephen, thank you so much for joining us today on Making Home Ownership Affordable.
Oh, well, thanks for having us, Letitia.
Of course. Of course. Now, as always, on Making Home Ownership Affordable, this particular segment is about ways that we can help make home ownership affordable for our consumers. So I'd like for you to tell our audience a little bit about, first of all, an IDA and then Covenant Community Capital.
You bet. So, as you know, and your buyers might know, there's three things that you have to bring together to buy a home. You need sufficient down payment and closing costs. You need credit to help you qualify for a loan, and sufficient monthly income to pay for the loan. And so we created a program called the Individual Development Account Program to help folks with the first two of those things, having savings for the down payment and building credit to qualify for the loan. We also have workforce partners as a United Way Thrive agency. And if folks want to build their income, we can make connections for them with that as well. And so the idea of the Individual Development Account Program is to create a platform through which people can invest in themselves and realize their goals. And we want to encourage them that those are possible. There's so many families I know that you have encountered, and certainly we have, that didn't think home ownership was possible, but it is. We've helped over 1,000 families become first-time homeowners. And so it's such a joy to see the transformation with the family, with their children. They're not in a place where the rent's going up every year and they have to move and go to a different school. They're anchored. And that has such a transforming effect in the lives of the kids. And so with the IDA program, folks will open a savings account with one of our financial partners, and we look for financial institutions that have interest earnings that are at least as much as inflation, because you don't want the purchasing power of your dollars to diminish. And then our program is 3 years in length, so that folks can take their time to put together their credit, build their credit if they need. We do credit builder loans to help folks enhance their credit. And as you might know, the higher your credit score, the lower the interest rate will be on your loan. There are different benchmarks that lower the rate because it lowers the risk for the bank, because the client has proved their credit worthiness. And so we have a credit counselor on staff that coaches them on ways to improve their credit. We are a credit reporting agency, so we can make them a free, no fee, no interest loan, credit builder loan to improve their credit. And then we match their savings to help with those down payment and closing costs.
Yes. So it's like a one-stop shop for the start of the process.
Yes, that's right.
So, and it's crazy. So I was telling Alex before you walked in that I call Covenant Community Capital to Frank's Red Hot Sauce. I put that on everything. As soon as a buyer walks in and says, okay, Letitia, I'm ready to purchase a home. And when I find out they're 80% area median income, the first stop is to send them over to Covenant Community Capital. But in with saying that, you guys do so much more than just the matching piece, which some of that stuff you talked about just a few minutes ago. And one of the things that I just found out about today was the credit builder.
Yes, so we do credit builder loans to help folks improve their credit. And we also have a savings prize that we offer, because we found, especially after like Hurricane Harvey, a lot of folks realized they needed emergency savings. 40% of folks in the Houston area can't come up with $400 in an emergency. And so we created a program where if you save $500 and keep it in your savings account for 6 months, then you can enter a drawing where we award cash prizes or 10% of the amount that you've saved at different benchmarks. So you can earn $50 if you save $500. If you saved $1,000 and kept it there, you can earn $100. If you save $2,500, then it's $250, or $5,000 or $10,000, then it's $500 or $1,000 in cash. So it's a really good deal.
Instantly, I'm feeling like if I do my chores, I'll be rewarded. That's instantly what I'm feeling like. You talked about the credit builder, which is absolutely amazing, and then now we have these benchmarks. Again, I didn't know about the benchmarks, but really, what we're doing is we're getting our clients in the habit of what we call paying themselves first.
That's right.
Or savings, and then earlier you stated that you've been able to assist 1,000 families. Can you kind of tell us what type of impact that has had on some of those families?
Well, just our goal is to help families through homeownership and through accessing quality education and through managing risk and through building savings for life to build wealth, and stability and create resilience that can endure to the children and to the grandchildren. And so one of the exciting things, just a month ago, we had one of our clients, Kevin Fuentes, purchase his home. And what was so exciting about that is that Kevin's parents, Edwin and Yuli, were Covenant clients 20 years ago.
Oh, my goodness.
And Edwin is a maintenance man, and Yuli, his wife, Kevin's mom, was a custodian. And they worked hard and became first-time homeowners. And now 20 years later, their son and his two brothers, all three of them, are now homeowners. And so that entire family's wealth-building trajectory is established for generations. And so that's something that's really thrilling to me, is to not just see how it helps the home buyer clients themselves, but creates a trajectory for their whole family.
I love it. And it's a little rewarding as well that we're sitting here at this wall. So I'm assuming that many of the pictures on this wall are from families that you've helped or that have written in words of encouragement, or you've given words of encouragement. So I think that's beautiful.
Yeah, these are all graduates of our program. So pictures in front of their home. And we've also do matches for homeowner clients to help their kids with college. And so we've got some college graduates up here and some business owners as well.
Awesome. Awesome. And with all of that being said, how early in the process, and specifically of homeownership, how early in the process of homeownership would you advocate that a client contacts Covenant Community Capital?
Sooner than they usually do. So.
Yes, I agree with that.
So, I'd say first, let's talk about credit. Yes. So, folks, everybody can improve their credit. Credit is always something that can be fixed. It just takes time. And so when a lender is underwriting a loan to someone, they generally are looking to see for 12 to 24 months worth of good payment history. And so one of the first things that we tell our clients is, this month start paying your minimums on time. And just if you keep paying your minimums on time, your credit score is going to go up. And that credit score is what a lender looks at and says, okay, all they're wanting to know, all a credit score says is, did you pay as agreed? When somebody else extended you credit, did you pay as you agreed to when you signed the document to get that credit? And so the credit score indicates how much you did that. And so lenders are looking because they want to be repaid. So that's kind of a measure of how well folks do that. And so if you just make those payments on time, even the minimums, then that credit will head up. And then if folks already have a score of 700 or so, they're in pretty good shape. But folks, we've had clients, right in the the 400s, in the 500s. And I went to a housewarming that one of our new clients had over the weekend. I mean, it was a party, and she wanted me to be there because she wanted all of her friends to meet and hear about what we do, and she took a big path. She made it, but she was one that's, had a long way to go on the credit journey, and she made it. And so start early on the credit journey. And then we had another client who she could save only $5 a month. And she, a lot of times folks think, how can I save? I don't have any leftover money. But what we do is encourage folks to track their spending for 30 days. And we have special forms to help that. And if you track every dollar, you can write it on a little note card, or you can take a picture of the receipts and just track it all. And then at the end of 30 days, folks will find, they look over it and they say, oh, well, I didn't need to buy that, or
That's
I didn't need
right.
to spend that. And they typically can find at least 5 or 6% of their income that they can set aside toward retiring debt and saving for the future. And that's, but you have to start. And in her case, she started with just $5 a month. And she saved she was in our program a number of years. And I mentioned our program was 3 years. But if you get near the end of the program and you're not ready, if you're still income qualified, you can roll over and enroll for another 3 years. So there's no time limit for us in that way. She went from $5 a month to 30% of her income.
Now that's rewarding and encouraging for you too. I'm sure when you saw that, it just gave you a whole different perspective on what it is that you do.
That's right.
Yeah.
And there's no feeling like having cash in the bank.
That's right.
It's power.
That's right. And it is. And I want to make sure that our audience heard this. I don't hear CEOs saying, I attended a client's housewarming party. So kudos to you, Stephen, for attending the party. I'm sure it was a blast. However, that just kind of shows the relationship that, you're kind of garnering with the clients that you're working with. So I'm definitely honored to have the partnership that I have with Covenant Community Capital. You've definitely been a blessing to the majority of the clients. Well, actually, all of the clients that I've referred. I just wish that I could refer more. But now, speaking of the IDA matching program, because we talked about that, the one-on-one matching program, there seems to be some additional funds to unlock with this one-on-one matching program. Let's talk about how do they get there?
Right. So, and that's another reason it's helpful to start earlier, because with time, you'll be able to access more matches. And so we have a collection of 11 matches that total up to $5,000. And we have, when folks sign up for our program, the first thing that we offer is a 2.5-hour workshop called the 5 Assets for a Rich Life. In this workshop, it's on Zoom. We do it once a month, alternate between Tuesday nights and Saturday mornings. We share tips on, first we talk about life assets and things about the way we approach life that affect how we spend money. And then we get into tips and tricks around saving for the future and managing risk, including, preparing to pass your wealth on to the next generation, having insurance coverages, being prepared for storms. And so once you take that class and if you're saving for a home buyer class, and we have a wonderful agency that houses right here with us called the Credit Coalition that has a fantastic 6-class session. Yep. And Sherry, the director, is amazing.
And she is.
And they have classes in the evenings as well, also on Zoom. So you take those 2 classes, and that qualifies you for $1,000 in match. And what we get folks to aim for is save $2,000 of your own dollars, and then we have these other match funds based on your saving $2,000. That would be $1,000. If you're buying a home where the general quality of the schools, according to a local nonprofit that rates schools called Children at Risk, if they collectively amount to about a C, then you can get another $1,000, kind of on an A through F scale. And then if you and save your, if you improve your credit to 700, then that's a match. And then that's like $200, I think. And then if you retire your consumer debt, then that's another $200. If you buy a home where the ratio is less than 33% for the house payment, that's another 200. And all of these are incentives for good things that will make your financial life rewarding. And then we have additional matches if you save at the time of when you close on your house, if you set aside emergency savings equal to one house payment and $750, and if you have a car payment, one car payment, then that's another, I think it might be $400. And then if you are saving for retirement, and we have a Vanguard retirement calculator, so if you are salting away to reach, and it'll help you calculate what you need to save based on what you are going to get with Social Security. If you're doing that, then that's another $400.
Look, I should have started this question with, audience, get your calculator. The good thing is it'll be on YouTube so they can hit rewind and go back and calculate all this money.
Yeah, so we've got a whole list of these things which kind of collectively amount to the benchmark foundations for financial well-being.
Yes, I absolutely love it. I absolutely love it. Now, this may be a difficult question, but why wouldn't someone enroll in an IDA program? Why wouldn't they?
Sure. So that's a good question. When we first started our programs, folks would say, it sounds too good to be true.
I agree.
Why would people give me money?
Yeah.
But the interesting thing is I haven't heard that much lately because we have so many clients out there, and most of our clients come because they're referred by a client that bought a home, or by a partner such as a realtor or a banker or a United Way agency that says, hey, they've helped our clients. We don't charge anything for any of our services. So if it's been a blessing, we don't have an advertising budget. So all we ask is, hey, tell your friends and family because we have money to give.
Yes.
But yeah, that's a very fair question, and say, put us to the test. So talk to our clients and you can see the results.
Well, he just said something extremely important. We don't charge anything. So here it is, a free service where you're set to receive free money. Of course, you're giving of your time, but all of these things are set to benefit you and your future. And then even mentioning the family that sent their son, I mean, that's a really big deal. And of course, he's going to send his children. And that next generation may not be able to qualify because at that point, they'll be well over that 80% area median income.
Yeah, that's the goal.
Yeah.
And a point that I should say is that you qualify based on your income only at the point that you enroll. Yeah. So after that, if your income goes up, that's great. That's what we hope for. So it's not, you don't qualify at the end, you qualify at the beginning. And we're very grateful that we can make these services free because of the generous support of United Way and the organizations that support them, financial institutions and foundations here in the community who want to help families' dreams come true.
Gotcha. And other real estate professionals are always asking me, Letitia, what can we stack with these down payment assistance programs? And the very first program I tell them, Covenant Community Capital. That's what you can stack with these other programs.
With all of them.
Yes, absolutely. And that takes us straight into your new venture that you told me about before we started filming, and that is with Fort Bend County.
Oh, yes. So we are administering a down payment program for the Fort Bend County Housing Finance Corporation. And that for our IDA program, the income limits are up to 80%. But for the Housing Finance Corporation, it's up to 120% of median income. And it's a $5,000 deferred payment loan, which means that there's no cost to receive it. And that it's only if you ever sell your home, then you would repay it. But as you know, because of inflation, dollars 30 years from now are a lot easier to repay than dollars now. So, yeah, it's a wonderful deal. We've closed homes. We have a builder now that is signing up clients down there to help them purchase homes. So we're excited to be a part of that program.
Perfect. So our Fort Bend County buyers, here's the place for you to stop. We're right back to Frank's Red Hot Sauce at Covenant Community Capital. Now, last question. If there is anything that you could share with our audience, and that being real estate professionals, consumers, other nonprofit organizations, because there is in Houston, I believe there's only one other IDA program or service that's being provided here in Houston. So, to my knowledge, you're only one of two.
I'm the only one that I know of.
Yeah.
Yeah.
So, if there is one thing that you could share with our audience, what would you say?
It's just, believe that your dream can be true. That there's so many clients, so many families who didn't think that they could become homeowners. And it's just one step at a time. And start early and pay yourself first. Just put what you can, $5 a month, $50. Just start putting it aside. It's amazing to me, Letitia, that we have clients who came in and never thought they could become homeowners, didn't think it was possible to save, who over the years, we've had some clients save $100,000.
Whoa.
Yeah, it's incredible.
You went from not being able to save anything to
Yeah.
$100,000.
That's right.
Man, they were cheating themselves for a long time.
Yeah. So, people discover the power of savings.
Yes.
And when you save and when you invest, when you set aside money for retirement and for your future, for your kids' future, then you begin to get the magic of compound interest working to your advantage rather than working against you when you take out a loan for something that depreciates in value, like a vehicle or appliances or things like that. You want to get to a point in life where you can save and pay cash for things that depreciate in value. Yeah. But it's all, a home is a good investment. A small business that increases your earnings can be a good investment in terms of something you might borrow money for, or education that increases your earnings. That can be worth taking a loan out for. But beyond those three, avoid debt.
Yeah. Awesome. Well, I want to thank you so very much for sitting down with me today and making homeownership affordable. Again, our goal is to provide the consumers with the knowledge and the information to assist in literally making homeownership affordable for our consumers. So we thank you for being here and look forward to working with you as often as humanly possible.
It's our pleasure. Thank you for letting us be a part of your show.
Of course.